You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to Options Insider Radio, live here, or at least live to tape, from the Securities Traders Association conference here in scenic, sunny, and quite warm lately, Orlando. A little bit of change of scenery from DC last year down here to Orlando. But you know what? The interview train never stops. We keep on rolling here for you, the listener, at the end of the day, listeners. And next up, joining me in the old hot seat, an old friend of the network. It's been a few months since we've checked in with our good buddy, Mr. JJ Kinahan, the CEO over there at IG North America and the president of Tastytrade. JJ, welcome back to the network, sir.
Always a pleasure to be on here, Mark. I can't wait to see you later in your bounce years or whatever.
As soon as I'm done with you, I'm off to Mickey. That's the only thing standing between me and Mickey out there. But yeah, you're joining me at an auspicious time. Let's just get into all the fun. Obviously, Fed just cutting rates literally as you're walking in the studio today. It's been the thing. I mean, the markets are Fed obsessed. I think a lot of people are like, well, I wish we could be done with the Fed. We're not done with the Fed yet. But what are your thoughts? Half points, surprising to some. Where do you fall, sir?
Well, the market really wanted it. There's no question about it. We saw the probabilities of this just an incredible move over the last week and a half or so.
Huge.
And I don't really remember a move that fast going into a Fed meeting. But we both have been around long enough to know the market's a spoiled child. And now it got what it wants to start. But what will it want more? As soon as the rate cut came out, I checked, November is now about a 60% quarter point rate cut, and then there's a 90% will get a quarter point at least by the end of the year. So again, the market's a spoiled child that always wants more. We'll see if to buy the rumor, sell the news over the next couple of days, and where we go from here. To your point, this really, if you look at the volumes, this basically killed trading so far this week. There really was not great volume heading into today.
Yeah, it's one of those sit on your hands and wait for the Fed.
Yeah.
It's funny. We've been rallying for so long now on the back of two things, right? The prospect of rate cuts, which we have yet to get until today, and then this magical AI elixir that's going to solve all of our problems. So we had one, maybe. I guess we finally got the other one today. We'll see if you're right. If the market has had enough, or if they want more. They always want more.
Well, and in the anticipation of the AI, what I say is more really what it's been than the actual. I think one of the healthy things for the market is in this last earnings season, for the first time, you saw Amazon and Microsoft and Apple question about, okay, you spend hundreds of millions, maybe billions of dollars, I don't know the exact sum total, on AI. What's the ROI? Yeah, it's cool if you're typing a paper, but really, has it done enough? So, many would argue, well, it's just like the first stages of the internet. Nobody knew where it would actually go. Absolutely, you can say that, but there's been a lot of money spent with very little return so far.
But it's so cool to say AI, JJ. That it just you say AI on an earnings call, bam, 20%, 20% on the top of the stock. It's immediate. Well, we got a lot of fun stuff going on here. But before we get into all that, what brings you down here, aside from talking to me? What brings you to STA?
Well, I think the STA to me is really one of the best. There are 3 or 4 really good meetings to go to every year. This is by far one of the best. Most people in our industry who have anything to do with market structure is not that sexy a topic to the average person, but on the back end, it's what makes everything run. And so all the folks who are involved in that end of the business are down here. You get good guests in terms of politicians, SEC guests, et cetera, so you can ask some good questions and hear a lot of smart people. And just like every conference, it's not only the content, it's all the meetings you'll have, having a cup of coffee, you run into somebody that you wanted to talk to anyways. So it usually is a really, really good use of time.
Well, let's get into some of that plumbing, the sexy stuff, as you put it. We just had the IEX folks in here a few minutes ago. They're all the buzz. They're the belle of the ball now. They're the latest ones to throw their hat into the ring, even though it doesn't sound like it's coming for probably roughly a year. So they're kind of getting ahead of it a little bit out there. But I hate to even bring this up because, I can see a lot of our listeners virtually, their eyes rolling. I go, oh, God, here we go, another exchange. But, for you run obviously a brokerage firm. People out there right now, if they're slinging their 10 lots of your Apple and NVIDIA, they have a pretty good experience for the most part. But we keep adding venue after venue after venue. These things are, sub 2%, sub 1% sometimes. Does it concern you down the road? Maybe we're getting to this, inflection point where maybe we're adding more complexity, more fragility for not much value at the end of the day? Or is it just like, hey, bring them all on. We more than merrier.
I think it's very tough for me who runs a firm that is not one of the top 5 firms to throw a stone at anybody else. I will say that if I think back, 10 years ago, at the time, maybe we had 7 exchanges and it was like, oh my God, how could we possibly need more? Yet we continue to get more venues. What it really does is it makes everybody more competitive and you see people with new ideas, et cetera. And just like everything else, if they're not providing a service that the market needs, the market will say no, thank you, and turn elsewhere. We have seen exchanges go under or merge with others, et cetera. I think you will continue to see that in every aspect. If there is no demand from the market, you just can't stay in business. And the way they get funded, et cetera, there are some rules around that, which going forward, which I think will make it the barrier to entry a little bit harder, which probably isn't the worst.
Going back to that, kind of tasty customer, that proverbial kind of 10 lot, sling in your Apples and your Teslas and NVIDIAs. From their perspective, you think they should even care? Like, okay, 5 exchanges, 50, what does it matter to them? They have a good experience. They can get their 10 lots off. Or does it get to a point where they need to start paying attention?
I think right now we're not at a point where it really matters to the end user with the end. I look at in my career, every single thing I've seen happen so far has been to the benefit of the retail trader. I have no reason to believe that that will not continue overall. We'll see what happens with some of these SEC proposals, et cetera. But overall, this has been a benefit. More competition has benefited the end user because prices have continued to come down and their fills are, I mean, it's amazing to think the quickness and the fill, improvements, et cetera, that happen for the retail client.
Last time we chatted down at OIC, we were talking about a variety of things, and the resilience of the market kept coming up. And we talked about everyone loved 0-day, but we hadn't really seen a test in the post zero DTE era. We kind of got that since the last time we chatted back on August 5th. Aggressive sell off, equally aggressive move right back to the upside out there. What are your thoughts on this kind of first system shock in the post zero DTE era and at least so far, the resilience we saw out there in the option space?
Well, I think it's really been amazing overall. Let's go back to COVID and how amazing the markets held up during that. There was not a disruption of service. People could still trade every single day. It's amazing what the exchanges and what all the firms around them have done to keep that going. We saw the same exact thing that day. Now, people may not be excited that the VIX exploded so much in such a short period of time, but with that, there was no interruption of service, at least for our clients. I know some firms maybe, had a little bit rougher experience. We were fortunate, our technology never went down. People could route orders at any time throughout the day. And so with that, I think it's a testament to the amount of testing and the amount of everything that goes on constantly to make sure that, again, clients have a great experience. The only really bad experience you can have is not to be able to trade the markets and not to be able to get out of your positions or adjust your positions that you need.
Do you think this is it? We've been joking about, these 0-day. Are they gamma bombs? Are they going to destroy the market? They didn't destroy everything on August 5th. Is this it? Can we put that to rest, or is there more data?
So I hope so, because I think it's kind of a silly argument, because what it actually does is it allows people to really trade where they want to trade. And you can buy them and you can sell them. You can buy other things against them using calendar spreads, et cetera. again, me being old, I guess I go back to my days on the floor when we went from quarterlies to monthlies to weeklies, and every time I was like, oh, this is going to be the worst thing that could possibly happen. To now we have dailies, and again, everything that's happened has been to the benefit of people, and there's clearly demand for it. If there wasn't, we wouldn't keep doing this, and people seem to like shorter time frames for some. And where I think it benefits people is just around events like this. People may only wanted to have played today for the interest rate cut. They don't want to buy premium for the rest of the week or the rest of the month or whatever it may be. So they're only buying premium for today's event.
And like you said, we're down at STA. We have, you said you're keeping an eye on a lot of regulatory developments. This is a big, regulatory conference. What are the ones that are near and dear to you that you're focusing on this trip?
Well, obviously the SEC proposals that got voted on today in terms of narrowing of spreads, et cetera, is something we'll keep our eye on and see how that works in reality versus proposal. It was one where there was some controversy around it, but I think as long as we're limiting the amount of stocks, it probably does make some sense. So that's one that definitely has our attention, so to speak. And then just some of the other, as you said, new exchanges coming in. What does that mean, et cetera? And can we continue to, with all the rules, all the proposals that are going on? There's some of them are pretty boring to the average person, but to us around reporting, et cetera, a lot of these things mean a lot. And where I think people have to also understand is a lot of this means added cost. And so that is something that obviously concerns us, but some of it may be, pass along costs or things like that, which would not be great for the retail trader.
Now, we just talked about the 0 day. We get a lot of questions still. This is a regulatory conference. Have you heard any interesting scuttlebutt about what everyone wants, which is, of course, the single name 0 day? The Apples, Teslas, pick your name,
Right.
your NVIDIA's out there.
I think there's a demand. I think everybody's trying to think of what would be the best solution for that. Again, there are some exercise and assignment concerns, uh, you know, because moves after the bell. Let's face it, the average person who listens to you is mostly retail traders. Most of those folks, when, it's 3:15 Chicago time, they may look at their positions for a while, but by 3:30 they want to be done. If they've been in there really focusing all day or they're out of doing their research. Well, if you have a big move in a stock after that time due to earnings or something, you wouldn't want anybody uh, to be disadvantaged due to an exercise or assignment after the close. And I think that's the biggest concern. At the end of the day, we all see a need. A lot of really smart people in this business will figure out a way to do it where we keep the playing field level for retail traders.
It's funny, when you and I did the options panel back in January, that was kind of the main stumbling block then, contra exercise, should we get rid of them, should we not?
But there's a lot of legacy systems involved, et cetera, too. And so I think that as there's some upgrades happening on the clearing side of the business, maybe it can help with this.
The other hot one we still get a lot of questions on, as crypto flings all over the place, is of course the options on the Bitcoin ETFs. Back at OIC, people seemed like they were a little, I think, lukewarm on just the prospect of them even coming to fruition at all. I'm hearing some interesting things this time. Are you hearing anything interesting behind the scenes that we might see those sometime in the near future?
I think, like many, I think it will be great. I hope it happens at a regulated exchange. But again, that's one that I don't know that there's any more clarity on from a regulatory point of view. I think there's some speculation and some wishing, but I don't know that there's any more actual
Heck of
clarity.
a lot of speculation and wishing.
Yes.
Yes. Let's talk about some concrete fun stuff. Let's talk about IG and Tastytrade. You guys are always putting on interesting, cool new things. What's the hot thing? What's coming down the pike that we can look forward
Yeah,
to?
so I think the biggest thing that's coming down that we're talking about now, we have, if you think about our traditional client base, they are very derivatives focused. And as you've known us for a long time. One of the things that we're doing better is we're really focusing on, particularly with our mobile devices, making the interaction a lot easier and simpler for people because not everybody our client base has changed. And I'm happy about that. And the fact that, there are people who are coming to us just wanting to trade equity. They're just wanting to do covered calls. They don't need quite the uh, I don't want to say complex, but in some ways maybe it is to them complex interaction that we've traditionally had. So we really worked on making that simpler. We're working on some cool things with AI that we're going through some regulatory conversations on with right now, but we want to make, you and I talked about jokingly about AI, but there are some cool things it can do for people, even as simple as customer service stuff. But I think there's a lot more we can do that we're working on right now that we find fun. We started Tasty at IG, which is, IG is around the world the largest CFD dealer. And so we got the Tastytrade software. We started in the UK. So we just started a month and a half ago. We're having not amazing success, but we're having some success having people trading equities and options back to the US from the UK. And so that's really interesting. We did an education event at the end of June over there at the O2, which many may know is a soccer stadium, has a theater inside there, and we sold it out. It was really fun. We're really excited about meeting our UK customers also. And so that's a model we're excited to take elsewhere too. We just got to make sure that we finish our job there in terms of getting more people on there and getting them educated. And with with our education on Tasty Live, and we've expanded that over to the UK so we can help those people start to understand the markets better also.
I like it. Growing the pie at the end of the day is good for everyone. Just to go back really quickly to the Tasty. So if you're a covered call trader, can you make a streamlined interface? Is that what it is? You just want to see the covered call trades?
Well, we'll make it much clearer on how to do that rather than having to go through. The steps will be faster, quicker, and it'll be much clearer to you.
Makes sense. My dad will love to hear that. He's the only covered call. I can't get him to do anything else. So he'll love to hear.
Your dad's made a lot of money over the last 8 or 10 years if that's all he's been doing. God bless him. So, But again, we want to educate people so that they can trade whatever they want. And then the other thing, you just started a futures show. So congratulations on that. And, our futures options trading has been our fastest growing area. It's up 64% year over year. And so there truly is, good timing by you. The retail trading of futures options has really picked up significantly over the last year.
It wasn't my choice. I was dragged kicking and screaming, JJ, but I couldn't resist.
Somebody's dragging you, kicking and screaming, and something's going to be really successful.
What's the hot thing that they're slinging then in the futures?
Primarily S&P futures options. Okay. That's where I think most people, from a retail point of view, start. S&Ps, NASDAQ, but then gold has been something this year that's been of a lot of interest. So you see gold and crude oil as being the next two that people are getting involved.
You can't escape the E-mini at the end of the day. It sucks everyone in. It's the gravitational well.
When you think about it, it's very similar to the SPX in many ways. So people are comfortable with the concepts behind it.
Well, JJ, I appreciate you taking some time out of your conference to chat with us here. A lot going on. We're looking forward to seeing how all of this, I do want to play around with that new interface. That sounds fun. All this new stuff plays out over there at Tastytrade in the coming months.
Well, thank you, Mark. It's always a pleasure to be on with you, and thanks for having me.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.